It seemed like just a few days ago that Solana was being lauded as the ETH killer that could take over crypto. Now we look at the Solana price and it's significantly down from its highs following the FTX collapse. So in today's show, I want to discuss what I think lies in store for the future of Solana, look at exactly what happened off the back of the Alameda FTX collapse, and verify my thesis for the future and let you guys know what I think lies for the future of Solana and if I still think it is a valid investment or not. Let's get straight into the show. So let's talk about whether Solana can recover. Could it possibly ever push towards its old all-time highs of $250? Is it now dead? Is it a dead project? Should we be exiting our bags? Well, I'm going to run you guys through exactly what I think of Solana in November 2022. But before we do that, we have to look at the history of Solana. Now, it's very important to establish context here because this will help us verify our thesis for the future. Now, Solana launched in 2019 at a price of $1 shortly after launch. Now, one of the main backers behind Solana was Alameda and FTX. This is one of the main reasons why Solana was so popular in the beginning. Alameda was basically worshipped at the time, especially after the success of their Solana investment. They gained a lot of credibility from that. And we can see, if we do look at the latest Solana research report, that Alameda Research did invest heavily in Solana in the very beginning with $4 million SOL investment. We can also see that they made another investment via their counterparty in September 2020, which was another 12 million SOL. And then again in January 2021, they purchased 34 million SOL. So it's very clear that they were one of the biggest backers. And if we do look at the Solana Labs transactions with FTX and Alameda Research, we can see that they also purchased a lot of Solana off Solana Labs. So it's clear that they were some of the biggest backers, and over 9 to 10% of the supply was actually sold to Sam in the end. And this is obviously one of the major reasons why Solana's taken such a big hit recently, is because Alameda was one of the big backers. Now, one of Sam's claims to fame, a claim that gained him a lot of credibility, was this tweet where he said, "I'll buy as much SOL as you have right now at $3. Sell me all you want, then go F off." This tweet ended up becoming extremely famous after Solana ended up hitting an all-time high of $250. And for a while, we did think Sam was a genius here. And for the most part, he was, if you view money making as the pure criteria for what constitutes a genius, because it's obvious he made a lot of money off this. And Alameda did make a lot of money off this, regardless of what happened in the future. So this was one of their big claims to fame, was their Solana purchase. And we saw after that, there was a massive run up. I mean, all the way from Sam's tweet at $3 to $250, Solana was undoubtedly one of the kings of crypto, one of the most popular projects for people to invest in. And that was off the back of a very, very strong NFT ecosystem. Solana found its niche as the gaming chain, the NFT blockchain, and it was extremely popular, seeing crazy NFT volume of over 2 million transactions a day at its peak in October 2022. And this actually happened quite late. Even during the bull run, it wasn't doing crazy volume in terms of NFTs, but it still was one of the biggest projects by NFT and gaming volume. And this is because it did find its home with the NFT and gaming community, and it was dubbed as that ETH killer because Solana's strengths lie in its ability to offer high throughput via offering a single global state. It was extremely fast, especially at a time when Ethereum was really struggling with congestion, really struggling with gas fees. Solana found its home because it could actually support these dApps. It could actually support these NFT ecosystems because of its fast speeds, because of its low gas feeds. And that is why Solana ended up being so popular. But things started to turn south for Solana. And I think even before the Alameda collapse, what really happened to Solana was we started to see the NFT volume drying down. We can see a clear decline from October heading into November here, as we can see a decline in transactions amongst NFT volume. Now, this was one of the first triggers which resulted in a lot of people starting to question whether the Solana ecosystem was still a valid investment. And we can even see that from that point onwards, I mean, even from its peak, the TVL on Solana was significantly decreasing. And, you know, Solana never really had its strength as a DeFi chain. It was always an NFT chain. It was always a gaming chain. However, it did lose TVL at a faster pace than many other protocols post-Luna collapse, when a lot of people withdrew their funds from DeFi because they started to get a little nervous, a little tentative about the situation and the future of DeFi. So although it did find its home as the NFT chain, an already weak DeFi ecosystem started to really diminish. And then we saw the NFTs started to have some troubles when Magic Eden announced its optional royalties program. This caused a big stir in the Solana community. We saw a lot of projects leave Solana at the time, and this was the real first sign of a downfall for Solana, even before what happened to Alameda. So let's move forward a little bit and look at actually what happened to Solana over the past few weeks, because even before what happened to Alameda, Solana was still $30 to $40. Yes, it got hit a lot more than other projects from its highs due to its vulnerabilities. However, it still had a major market cap in the top 8 of all cryptocurrencies. It was still viewed as a chain that could potentially reach its all-time highs. And the reason why I'm speaking in the past tense right now is because I believe that the public sentiment has shifted towards Solana. Now, obviously, Alameda and SBF were some of the biggest backers, if not the biggest backers of Solana. And one of the main reasons it dropped so heavily post Alameda is because of this. And because SBF and Alameda had such close ties, this did make Solana prone to dumping. When Alameda needed liquidity in order to fulfill some of their withdrawals, it did make sense that Solana was one of the first port of calls, given that it was one of their biggest holdings. And then you have an extension of this, given the fact that they may have to liquidate future holdings, which could result in more Solana dumping on the market. And that's one of the main reasons why we saw that sell-off, people preemptively selling off ahead of what people viewed as a potential liquidity crisis in the future. And we did see this start to hit DeFi applications. We saw a lot of the pegs on Solana going awry. We saw the wrapped Bitcoin lose peg on Solana. We saw multiple DeFi applications struggling with liquidity. It did have ramifications for the DeFi ecosystem. Now, there's a very good thread to summarize exactly what happened with this whole Solana saga by Satoshi Stacker. He said, due to the FTX Alameda situation, Sol's crashed over 50% this the past week. This is what you need to know. He said, to be clear, Solana will need to overcome some huge challenges if the ecosystem is going to supply. As we already talked about before, Alameda and FTX were huge supporters of the project. He said that in terms of wrapped assets, many protocol support wrapped versions, native assets such as Bitcoin and Ethereum on Solana. However, obviously, once we started to see liquidity issues becoming apparent on Solana, we saw a lot of these assets lose backing. That resulted in wrapped Bitcoin hitting $3,000 because it could not be redeemed on the network, which was a huge issue, which resulted in those tokens losing peg. Sell pressure is another major reason why we did see a huge Solana decline. Because they were huge holders of Sol, there was huge sell pressure going onto the market, not only at the time of the Alameda collapse when they needed liquidity, but also in the future potentially as they liquidate some of their balance sheet to pay back creditors in what we think will be a very long and drawn out bankruptcy process, similarly to what potentially we even saw with Mt. Gox back in the day. We know these things take time to play out. And I think the investors are sitting here and saying, well, Solana has significant headwinds in the near future. So why would we keep our money in Solana now when potentially we're going to be facing these headwinds for many months, if not years? He said Solana's DeFi TVL has decreased over 50% this week, and we can see this on the charts just in a week. Even though the trend of its TVL was trending downwards, we've seen a huge collapse relative to other protocols. Solana is now number 12 by TVL. It used to be in the top 4. It has significantly dropped off the rankings, coming in with a TVL of $328 million today. And Satoshi says, while all of these are serious challenges, there are still some positive factors to be aware of that could help Solana to rebuild and possibly even one day emerge stronger from this incident. We'll get to these in a second, but I still want to go over a few of the facts related to the Alameda FTX collapse that affected Solana. Solana Labs came out and issued an official statement. Obviously, there was a lot of speculation with the token unlock upcoming. There was a lot of FUD surrounding Sol, so they did clear up a few things. The first thing that they wanted to clear up was the fact that although DeFi did experience some issues during this time due to liquidity constraints, the Solana network itself, despite admittedly having vulnerabilities in the past, didn't experience any notable performance or uptime issues this week. So the network itself was actually relatively unaffected despite DeFi obviously taking a huge knock. They also disclosed their balance sheet exposure to FTX and Alameda. They said the Solana Foundation had around $1 million in cash or cash equivalents on FTX. This doesn't sound like a whole lot, and it doesn't really sound like a cause for concern either. However, their asset exposure to FTX and Alameda is much larger because they did have 3.24 million of FTX trading stock, 3.43 million of FTT tokens, and 134 million of Serum tokens. And we know what happened with Serum. It essentially collapsed. Although it was later forked, it was one of the biggest dApps on Solana, and it also collapsed, and the Solana Foundation had significant exposure. As I showed you guys at the start of the video, they did disclose all of Alameda's purchases. This totals up to around 9 to 10% of the total available Solana supply at the time, which is quite a large amount. And as they affirmed here as well, the DeFi ecosystem on Solana, although many DeFi projects didn't have exposure to FTX or had limited exposure to FTX, that ecosystem took a hit as a whole as sentiment really started to take a knock following what happened to FTX. So what does this mean for the future of Solana? It's clear that Alameda's ties run deep with Solana. It's clear that this has changed the fundamentals of Solana, but can the network recover? And is this something that we should be looking at an opportunity to potentially buy a dip on a token that could soar towards all-time highs next cycle? Or is this simply something that we now need to forget about and move on to the latest and greatest narrative? Now, this is a question that I've been thinking about long and hard for the last week or so, since the FTX saga started to really heat up. And I think I've come to a few conclusions here. My first conclusion is this. I went to Token 2049, right? I went to the Solana conference. I saw it firsthand, and I saw a lot of the development that was happening behind the scenes. And I do think to this day, even given what has happened in recent times, it does still have a very strong community. Now, obviously, this community will take a hit as general retail sentiment tends to be a little more fickle in times like these. People may genuinely leave the ecosystem. However, it still does have a strong community, and it still has so many great NFT projects building on the chain, so many great dApps and games building on the chain as well. The first day of the Solana conference, I rocked up to this massive hall full of gaming projects. I think there was like 50 or 60 gaming projects, all with stalls, all doing presentations. And when we look at brand identity and we look at L1s really carving out a niche for themselves, I don't think there's an L1 that's carved out a stronger niche for itself than Solana Gaming. I guess the problem with gaming, though, is it's not as tangible right now because a lot of games are still in development. A lot of games are essentially a long-term bet, meaning we're not really going to see the fruits of their labor for many, many years' time. So although gaming has a really strong identity on Solana, it's still the NFTs that a lot of people recognize as being Solana's biggest strengths. But there are some amazing projects on Solana. We know the Serum tech, for example, was absolutely brilliant. So brilliant, however, even after Serum started experiencing issues, the developers decided to actually fork it because they said, look, we can't let this token just go to waste. We can't let this project go to waste considering how good the technology is. Rand said it earlier on a Spaces today that he thinks the Serum technology in and of itself is a $2 to $3 billion protocol. He likes the technology that much, and I think the developers side with his thesis there because they did actually decide to fork Serum because it does have some very good redeeming qualities which can be used and utilized in what could potentially be a recovering DeFi ecosystem for Solana in the future. Mango Max said Serum is a special project. It inspired many of us to start building on Solana. It's the central order book for liquidity providers to backstop liquidations of all major lending protocols. It just can't end like this. Me and a couple of insanely talented developers decided to take matters into our own hands and push for a relaunch. And we saw when they did relaunch that they launched with size, $48 million on the buy side of the order book. There was significant interest in the tech here post the fork. Now, the reason why it had a major collapse is because obviously Serum had, or FTX had massive exposure to Serum. So it was one of the tokens that came under the most scrutiny because they essentially controlled so many tokens. And I think this highlights the issue with centralization in crypto. Whenever you have one entity holding so many of the tokens in an ecosystem or any project for that matter, that does imply systemic risk because if something happens to that entity, like we saw happening with FTX, then they could be forced to dump a lot of tokens. And that obviously results quite negatively in the token price. So in the future, I think we do have to take a lesson from this. And whenever we research crypto protocols in the future, we have to make sure that we don't have super high percentages lying in the hands of one central entity. And we make sure that it is spread out across a variety of holders because it's very important to not only have transparency there, but also have, strive for protocols that have true decentralization. So that is one of the main things that we need to be on the lookout when we are researching projects in the future, because it was one of the systemic risks when it came to the Solana ecosystem. So the future of Solana, it does look shaky. However, I do think that the developers will end up shining through in the end. And although Solana may never recover to its $250 highs again, in fact, I will go out on a limb right now and say that the likelihood of it reaching its all-time highs is much, much lower of it not reaching its all-time highs. That's just my personal opinion. Obviously, this video is not financial advice. That's just what I think. However, that doesn't mean that Solana still can't be prone to some significant gains in the future. There's too much good development in this ecosystem for me to think that it's going to go to waste. I really, really like the founder, Anatoly, as well. I like the team. Raj, the entire team is very inspiring, to be honest. And after Token 2049, I was impressed with what I saw, but it is a major headwind having Alameda dumping tokens. So in my opinion, especially Solana trends below $10, I do think it could present an advantageous accumulation opportunity, just given the fact you're betting on a piece of technology that is quite strong. You're betting on an ecosystem with a strong brand identity, a strong community, and also a technology that developers actually want to develop on. And that's why Solana's development activity has some of the highest statistics in crypto. So for that reason, although I'm not as bullish on the future of Solana as I was, because you just can't be when you have 10% of the total supply potentially being dumped, unlocks happening left, right, and center, and also a lot of people leaving the ecosystem, I think there's still something to take out of this. And this is one of the reasons why Solana is actually still in my portfolio. And it's one of the reasons why I'm still accumulating some Solana. Now, let me give you a huge caveat here. Just because I'm accumulating Solana does not mean it's going to be 10, 20, or 30% of my portfolio. I think an ideal weighting for something like Solana, just like Phantom, would be around like a 2 to 3% of your portfolio. It's a speculative bet. It's not a sure bet. If you want to chuck 30% into Ethereum, be my guest. But chucking 30% into something like Solana, it's extremely risky. We don't need to pick and choose here. We don't need to make a decision between, should I buy or should I sell? The decision's actually quite simple. Just tailor your percentage allocation based on your risk tolerance. If you're slightly more bullish on a recovery, maybe allocate up to 5%. If you're quite bearish on a recovery, but you still want to maybe take a punt on the ecosystem just because you're not quite sure how it's going to play out, well, then you just allocate less, even 0.5% of your portfolio. The trick here, and this is the trick for the entirety of crypto, is not if to buy or if not to buy. It's actually with what percentage to buy. And that is a mindset shift that I've made in recent times when I'm trying to pick between different L1s and I can't choose. It's that we can actually gain exposure without putting ourselves out on a limb and investing 20% of our portfolios into these tokens. And that's why in my first iteration of my nested portfolios, I did put in Solana at 10%. Now, this, by the way, is not a portfolio that I would allocate with 100% of my capital. This is just a portfolio that I created that I thought could be a decent one to DCA into the near future. But I did chuck Solana in here with a smaller allocation into this specific portfolio because I think it does potentially offer some value here, because I do think it's asymmetric risk in the respect that, okay, it could fail, it could go to zero. If it does, cool, we lose a couple percent. It sucks, but we're going to move on and we're going to be fine. But if it succeeds, I do think the risk reward is to the upside because of the ecosystem that is being developed on Solana. So yes, I know it sucks for a lot of bag holders, and I know it's very shaky times. It's a real test of conviction. However, I do still believe that potentially there is upside in Sol, and that is why I continue to accumulate. But I'm happy to be proven wrong. And if you do have any suggestions in the comments below for why you may think I'm wrong, then I'm willing to hear that. I'm willing to take criticism on it because it's still a thesis that I'm evaluating. So if you want to actually invest in this portfolio that I'm showing you, which constitutes of Ethereum, BNB, Lido, GNS, two of my favorite DeFi protocols, Solana, and another token which I think has been doing a lot during the bear market, Chainlink, then you can invest using the first link of the description. It's under my nested portfolio link here. And essentially what you can do is you can copy this allocation percentage for allocation percentage by simply depositing funds. You can literally use your credit card or USDC or USDT from your wallet on the Polygon network. So you guys can actually copy trade. And I am essentially going to be updating this portfolio based on my thesis and updating this portfolio for you guys. So if you invest in it, you can essentially copy my allocations. But I'm going to be coming out with more portfolios in the future. This is my first one. I'd say it's on the slightly safer side. In the future, I'm sure I'm going to do some crazy, risky DeFi iterations, which you'll be able to invest in. Maybe I even just do a really safe Ethereum, Bitcoin, and BNB portfolio, for example. But this is one that you can actually copy trade me today. And I'll just let the early investors know. We will be doing a giveaway. I'll probably announce that on tomorrow or the next show to the first few copy traders that actually copy my portfolio here. We will be giving away some money. I'll give you guys the details in the near future of that. But that just, gives you a license maybe to just check out the platform. I mean, even if you just want to put a dollar or two into the nested portfolio, that's fine, because I do think it's a pretty cool platform to play around with. And I'm really, really happy that Nested did come on board to sponsor the show, because it's a great protocol, essentially allowing you to DCA into assets directly, into my portfolio directly from your credit card. I mean, that is pretty cool. And I also do think that with some of the issues that centralized exchanges are facing, especially given the kind of lack of trust with most of the community in these exchanges, I think DeFi does propose a viable alternative to centralized exchanges and gives you an option to kind of use a very cool protocol here. So that's kind of why I like Nesta for this sort of stuff. But let me know in the comments below what you do think of the future of the Solana ecosystem. I hope my thesis today makes sense. Essentially, just as a TLDR, a too long didn't read summary of today's video, yes, Solana's facing headwinds. Yes, it's kind of lost its way a little bit, and some of the protocols, especially DeFi protocols on Solana, are facing significant issues. Yes, there are major unlocks upcoming, and the team and Alameda will likely dump more Solana tokens if they haven't dumped them all already. However, I still do believe that there is decent risk reward to get involved in Solana, just given how far it is off its highs and given that the community here is still quite strong and there is a lot of strong developers still developing on Solana. So it does become slightly riskier in its risk profile than maybe it was a couple of weeks ago. But that doesn't mean that I can't allocate a small percentage of my portfolio towards it. I'd love to get this sub $10. I think $8, $9, this definitely becomes a buy. I'll be honest, I did buy some recently just to get some initial exposure to the ecosystem. But as it goes lower, this is something that I'll probably look at topping up just a little bit more of, but keeping within those within that framework of that 1% to 2% kind of portfolio allocation. So I hope this gives you guys a bit of clarity on the future of Solana, and you guys can kind of create your own thesis from there. I highly recommend, of course, like always, doing your own research and verifying the good side of the Solana ecosystem, the bad side of the ecosystem, and then coming up with a decision whether this is something you guys want to pursue or whether you just want to kind of move on to other ecosystems as well. I think that's also a valid approach, but as long as you've done your own research and you've looked through all the data to verify your own thesis. All right, hope you guys enjoyed the show. I will catch you in the next one. See you later. Peace.